Okay, folks, welcome back. This is our midweek review for January 20th, 2021. All right, so here's the economic calendar for the remainder of the week. I'm not going to go through everything here. Obviously, you can read it for yourself. But while the calendar is up, I'll just make a couple comments about what I noticed today and what I did not notice as a result of the inauguration of Mr. Joe Biden. I was expecting more volatility. I was expecting some kind of an injection of movement one way or the other, even if it was to go both sides and back into the middle. Neither of those scenarios happened. So it's kind of like a nothing burger. To look at the way DC had its preparation, you would have thought China or Russia was invading. And it's just really nothing happened. So the question I'm sure all of you are wondering is, what do I make of all this? Well, I think pretty much the presidency is a nothing burger. And that means I simply go back to the normal procedure that I follow, which is I do nothing in January anyway. So the first trading day of February, that's what I'm waiting for. So I kind of keep my analysis light, my expectations low, and take whatever the market gives me. But because I'm obligated to give you my opinion or over my shoulder view, I mean, obviously I got to tell you what I think. But you can see when we get into the analysis, not a whole lot has happened. So with that said, we're going to look at the US dollar daily chart. And this is the naked chart. So when you see these, you want to kind of take a screen capture of this and take it to your photo editor and dress up your chart the way you want. Or if you want to take the extra time to try to make your chart look as close as mine by sizing up and scaling inside of TradingView or whatever platform you're using, I prefer you use TradingView because your data will be exactly as mine using the Forex.com data feed there. I'm not recommending Forex.com as a broker. It's just that's the data feed I use, so that way everything remains consistent across the board. So I'm going to show you the annotations now. So if you're not ready, pause the video. All right, so here we are. We got really close to it on Monday, but we did not get to the premium level relative to this high and this low. And we're kind of like in no man's land. So while my directional bias is still long-term lower on dollar, I'm not terribly bullish from where we are right now because there was a lack of volatility today as a result of the inauguration. It's just I don't have a strong opinion one way or the other here. So I don't think that this is a way we would frame a trade that would be high probability, one direction or the other. So what am I saying here? There's times in your analysis, and you've seen me if you've been here for a number of years already, the periods where I go into, I need to wait for more information. Okay, this is a classic definition of what I'm thinking at the time when those instances occur. So I have a long-term bearish bias for dollar. I have a short-term bullish bias on dollar that takes us up into potentially a premium level, maybe up into that weekly fair value gap, maybe into the optimal trade entry. At the very minimum, going above 91 big figure. That's what I was expecting on the near term. We did not get any volatility today. So the markets are simply silent. And that means that the central banks are going to have to either use something at a later time or create something on their own. So we have the ECB tomorrow. So that might be a stimuli that brings in some volatility because the Nothing Burger inauguration event today hasn't given us anything to work with. Okay, so the reason why I have to wait for more information is because the way the chart is now, there is nothing to frame a continuation or a reversal on, because it could go either direction. It could continue to trade above into that premium level, but nothing in here that I would feel terribly excited about. Or it could drop lower and it would be just a move I wouldn't be prepared to participate in. So it's one of those, I don't care either way because I don't have a setup. Now you might see something in these charts that your model or the thing that you've gravitated towards on a short-term lower time frame chart and say, okay, I have a setup here. So this is one of those moments where try not to take what I'm saying personally, even if this was like, say we're in a more volatile month, not January, I would not be taking any trades personally. I wouldn't participate. I wouldn't be looking at anything because it doesn't give me a one-sidedness that I would demand for me to frame high probability. So with that said, let's go on into the hourly chart. And again, here's our naked chart. So if you're not ready for the annotations, hit pause. All right, so we have the premium level just very, very close to it on the 18th. Didn't quite get to it. And we had a gap down when the dollar started trading again. After running the buy side liquidity pool, gap lower, went back up, filled in the gap, trade lower. Do we have a stage that takes us below the 90, 10, 90 big figure to attack the sell side liquidity in here? I don't know. Do we have enough steam to roll back off of this gap in here? So in other words, we traded a gap lower, traded back through it, traded here. Are we finding some support in here that makes it reject and go higher and trade up into that premium level? It could. I'm just not willing to participate on this PD array. In other words, that gap that's not noted here, you'll see it noted in my 15-minute chart. I would normally, in a more volatile condition, if I was one-sidedly bullish, I would be buying it based on what you see even in this chart right here, which flies in the face of a lot of other styles of trading, because you see that big run from essentially 90.27 or so and then up into 90.70. That would scare a lot of people from not wanting to go short, but also the way it dropped off from 90.70 down to 90.38 or 39, that might scare people from wanting to buy it. But if I was one-sidedly bullish, not having a long-term bearish stance on dollar, and it was not in January, it was a more volatile month, I would look at that as a buy because it was coming back into that gap that's not annotated. Okay, so this area in here, that would be enough for me to buy if I was bullish, but I'm not terribly bullish right now because we didn't see any participation in the banks today. Nothing. They did nothing. So the scenario I was anticipating, some kind of a volatility injection as a result of it, just didn't materialize. So we're left waiting for more information, more stimuli, more momentum, movement, some kind of displacement needs to take place now. And again, as I mentioned, ECB is tomorrow, so we might get something from that. Okay, here's the 15-minute time frame on the dollar index. Again, take a screenshot of this if you want to do the exercises of marking up before you see the annotations. If you're not ready, pause the video now. All right, so here's that initial gap here after running the buy side liquidity, and then breaks down. We have a small little institutional order flow entry there, fair value gap here, and then rolls over. Here's that other gap that now is annotated. We traded through it and came back into it here. I would use that as a buy if I was bullish. Does it pan out in this scenario? It could, but it would be, well, it's one of the things I would have done it at a different time, but I'm not participating in. So I'm not trying to give you a 50-50 and I'm going to wait to see what comes and say, haha, look how smart I am. I'm trying to emphasize, this is the main takeaway here. I'm emphasizing and really pushing the idea that because of where we are, in other words, we're not close to the premium level. We didn't get to it. And nothing terribly is bearish here to frame something high probability. At least I don't have that. Then there's nothing to do. There's not, and you just wait. And sometimes it's very frustrating, especially for new students. When they come in here on the 27th and they watch this video, something might happen in the charts and they'll be like, well, why didn't he see this? Or why didn't he expect this? Or, they'll have 1,000 different questions. And if you're one of those individuals in the last group that's coming in and just now getting to this video, just know that if you go through all the other videos, you're going to find that there's periods where I usually just say I'm waiting for more information, and I'm not really outlining as much as I'm doing it here, so that way you learn what makes me indecisive about the marketplace and why I have to wait. That's a very important lesson, because it's easy to talk yourself into a trade, but wisdom comes by knowing when not to take a trade at all. Regardless of whatever you think you see in the chart, there's just simply nothing in here as a displacement that sets the tone for one-sidedness, which is the hallmark for high probability trading. All right, that takes us to Eurodollar. This is our daily chart. And again, if you're not ready, pause the video before I show annotations. All right, so the last time we spoke, I mentioned that we did not want to see it trade back above that rejection block, and we got it. So on Monday, we went a little bit lower, ran the short-term low here, not by much, but it's fine. Hits the sell side liquidity, and then runs above the rejection block. That is not what you want to see if you're expecting lower prices. Okay, you don't want to see that. Now, if the market was to, like today, I was expecting it to potentially just cave in and go extremely quickly lower and running out that Monday low, and it just simply couldn't do it. So it's found a measure of indecisiveness, and it can't find a direction. So we wait. Now, what's nice is this candle's potentially, well, possibly rather, closing with a down close. That sets the tone for a potential bullish order block that if we run through today's high, that might be useful going forward for euro going higher, and then we'd have to cancel out any bearishness. But if we break below that short-term low, I can use that weekly fair value gap, the high-end level, which is here. So in other words, if we break through it, come back up and touch this level, it's not just support and resistance, it's the fact that we have an imbalance and we're trading back to a premium array. And then I would look for potentially trading down into this buy side imbalance, sell side inefficiency, and or a bullish order block. So nothing's changed in my expectation. It's just right now I have nothing to act on, nothing to point to and say, okay, here's what we're looking for that frames this or that. So we're like in a period of transition. I'm favoring still every point of reference that I've annotated here for euro, unless we take out Wednesday or today's high. If we take that out, then I'm probably wrong in my expectations, and the weekly fair value gap has done its job just with this run here, and then it might start running higher as a result. And again, that's assuming the dollar falls lower and can't find its way up into a premium relative to its daily chart. All right, here is the hourly chart for euro dollar. If you're not ready, hit the pause button. Okay, so here is what I'm seeing on the hourly chart. So it's pretty slim pickings here. We have a buy side liquidity pool here, and we have a buy side liquidity pool here. We had that little shallow run on the sell side liquidity, which is that weekly fair value gap, the high end of the weekly fair value gap. We traded into that and then rallied one more time, rallied, and then broke down and stopped dead in its tracks on the rejection block. So it's just not, it's not at a period where I would go in and say, okay, yeah, I'm absolutely buying it here, or I'm expecting it to sell off here. It can go either way, and I could justify it in the way I see price action. I could see it very easily, both sides, buying or selling. Not that either one is a strong argument, but because of the ability or the potential for me to outline it both directions and make it sound convincing with my concepts, that's not high probability. Okay, when it's so one-sided, you can clearly see what it wants to do and what it's likely to work off of, and it sounds mystical. It sounds high and lofty. It sounds like mumbo jumbo, okay, for a lay audience, for someone that's never really been under my wing in a real strict capacity. It sounds like just a whole bunch of nonsense, but it's because it's experience that has a greater effect on understanding what I'm saying here. the folks that have been with me since 2016 can relate to this. The folks that have been with me since 2007, 2018 can relate to this. 2019 group might get some feeling for what I mean by this, and 2020 group, they're like, okay, I'm going to take your word for it, and we'll just see what happens. Maybe not all of them, but that's about what experience level is probably understanding what I'm saying here, because they've seen enough times over the years since 2016 where I have gone into periods where I need more information. Sometimes it takes a week, sometimes it takes one day to get the information I need to get back in sync. Right now, I don't have a feeling for bullishness or bearishness that I can point to say this is what it's likely to do to, go to next. I'm just saying, I'm co-signing that my lower opinion on euro still could potentially come, but it comes, if it does, on such a low probability scenario that it's really not worth mentioning should it get there. Yeah, it's a moral victory, but it's not something that I personally could participate in. So if it does trade down there and does it perfectly, what does that really do for you? Nothing. It just deposits more experience. The main focus of this midweek review is to understand the absence of high probability, the absence of a clear, definable means of saying, okay, this is how we can frame the next price swing, higher or lower. That's what's missing from the price action for me. So if you're new, that's a little deflating hearing that. But if you've been here for a while, it makes perfect sense. Like, oh yeah, now I know what you mean when you say you don't know what's going to happen right now, and what are you waiting for? Why are you coming to that conclusion that you need more information? What's missing? I'm trying to outline that here by framing things that would not be interesting to me. And like I mentioned in the previous discussion, we didn't want to see a run back above that rejection block here, and we did. We got it. So it kind of makes things a little more sketchy. 15-minute time frame on euro. If you're not ready for the annotations, pause your video right now. All right, so we have a bullish order block here. Trades down into it here, which is also a small optimal trade entry. We have a price run here. Fair value gap, institutional order flow entry drill. Again, if you don't know what that is, you will find it in the commentaries. Price runs up, comes back down into bullish order block, 2 consecutive down close candles. Hits that, runs up, small little imbalance, fills it with the order block, and then runs above. It runs just a shallow run above the highs it creates in here, and then just gives up the ghost, trading into a low prior to the inauguration today, and then has done simply nothing since then. So again, you can see the sensitivity at that rejection block. I don't know. Gun to my head, I'd have to say, okay, I'm going to stay with my idea of a lower euro and higher run into the premium for the dollar. I'd have to take the consequences being wrong if that's the case. I'm going to side with my analysis there, but just know that there's nothing here that I could frame a trade on. It would be just something that would be like, oh well, it went where I thought it was going to go, which is amazing for development if you're new. But for someone like myself, it just simply means there's nothing for me to do, and okay, that's just one other move I've anticipated and it happened. There's thousands of those types of things happening every year that I'm not participating in. I can see them, I can talk about them, I can say they're likely to happen. I didn't participate. And that's some of the illusion that comes along with learning how to trade from somebody, because the natural assumption is that person that's training you does 1,000 different trades a month, and that's not true. And I certainly don't make that many trades. I want the best. I want the easiest, low-hanging fruit, so that way when I put money into the marketplace, I'm not sweating and worrying about whether or not there is a strong potential reversal in the making, or if I'm offside. I know that I've done my due diligence. I know that the market's likely to do what I think it might do, and I have a strong conviction. So therefore, I commit, and I don't have a immediate regret or anxiety attack once the trade is entered. And you'll know what I mean by that once you start to learn how to do this consistently. All right, finally, we're moving into cable. I'm going to try to go through this one pretty quick. We've been hands off on this one. You can see it's still trying to press higher. I think personally that they're trying to take this thing up on a spike up into the 138s, 139s, maybe even spike it up into 140. And what we do, if we even do that at all, remains to be seen. I just don't trust this pair. It won't drop. It keeps coming back every time it goes lower, and which indicates it's under an extreme amount of manipulation. So if you're not ready for the annotations, pause your video now. It won't be a lot. All right, so we have a buy-side liquidity pool that has been engineered with these relative equal highs, and I don't think that they'll leave that there. I think they're going to run into that. Now, how much of a consolidation or a retracement from where we are now is needed? I don't think it needs to do much, but I do think it wants to run through that. All right, so here is the hourly chart. And again, if you're not ready, pause the video. Okay. All right, so we have the breaker that was eventually hit here prior to today's trading. We were over here. We came down off of all these premium arrays, traded into the fair value gaps, and we were looking for that to happen, and then accelerated down into, and I have this level here. I wanted you to think about that level because I thought for sure that we would potentially spike down into it. And we didn't get that on Monday, but we got real close to it. But we worked inside of this fair value gap and traded below an old area of order flow, which where there was an old liquidity pool. It worked in that level again, and it's also an optimal trade entry level. From this low up to this high are your optimal trade entry levels, and the market did in fact start to trade up. The fair value gaps, if we project them through, okay, we had some consolidation in here, picked up some more orders, and then ran up into the breaker, clearing the high, and once it hit that, it fell out of bed pretty handsomely. I still don't think it's done going up. I think what they keep doing here is setting traps for bears, okay, and even these little runs here, that's not stopping out large funds. That's just stopping out the the banks that are smaller in entity that are cannibalizing, and larger traders after putting on their shorts. They're going back and taking those traders out. This and this, they're setting up a larger liquidity pool, in my opinion, that I think that they'll end up taking out more significant large funds that are trying to short cable. Finally, 15-minute time frame for GBP USD. If you're not ready for the annotations, pause the video now. All right, and this is just a closer view of what was shown on the hourly chart. Not too much to speak of. All the PD arrays that were annotated in the last discussion is shown there. There's our fair value gap accumulating. And look at all of this. This is all a straight run into liquidity. It's hard to fight something like this, okay? And there are several places on the internet you can look and see people were trying to sell short all in here. You can hear them clamoring, saying, oh yeah, GBP is going to collapse, and they're pointing back to previous years where it's dropped down several hundred pips, and it just keeps punishing them. So it's hard to work in this environment unless you really know what you're doing. I feel like I know what I'm doing, and I still don't want to touch this pair. Okay, so I don't know how to make it any more plain than that, because I know a lot of you are still trying to send me questions like I'm hiding something from you. You ask me about cable, like, what do you think about this? Am I on the right path here? I'm not willing to touch this pair. I'm not. And you may be asking yourself, why am I keeping this pair in rotation in the commentary? It's to show you how to avoid it. Now, you might be seeing these moves and saying, well, this is what I want to do. It's altogether different when you try to do it with live funds. You will get burned, period. If I felt confident that I was going to get a better read on price if I did it with a live trade, I'd be trading with live funds with it. But I'm telling you up front, I don't know what it's going to do. It might be going to the things you hear me talking about, but it's not doing it on the framework that makes perfect sense to me. So if it's not something that's high probability for me, how on earth can I frame it as a high probability observation for you to study and learn from if I don't see it as a viable setup? Hopefully that makes sense. Now, this is probably one of those low impact videos where it's like, okay, yeah, thanks for your time, ICT, but I didn't learn anything. You will be able to come back to videos like this once you are a charter member and you've been here for a while and we've gone through a year or so. You'll see periods where we're like this. Okay, you're not going to know everything every single time you sit down in front of the charts. Sometimes the markets have to create these periods where nothing's going on. They're just consolidations. They're just dead spaces in price action. You just can't do anything with a great deal of probability. And that's why you're here. You want to learn how to avoid trading in these environments and identify high probability where it's one-sidedness. You just know what you're looking for, and it's easy to take it like a candy out of a child's hand. That's what you're trying to learn here. Okay, and if you don't see that, there's nothing else I can do to make you appreciate it except for showing you like we're doing here. There are periods where, yes, the market might move. But if it's not moving in a way where we can frame it, or at least I can frame it in a way that makes perfect sense and everything is symmetrical, like why isn't the dollar moving in tandem lower like you see here on cable? Because there's a decoupling. Everything is disjointed right now. And when that happens, you have to identify that and say, okay, yes, I might see something in the chart, but do I have every ounce of probability behind my idea? If you don't, then why on earth are you risking money? You're gambling. So hopefully you've found that insightful. We will have a price action lesson in the weekend edition. It will be obviously posted around 10 o'clock in the morning, Sunday's time. And it will be basically preparing you for what we're going to be doing in 2021, and also for those that are already charter members, how you can go back through in a more structured way, and you'll get more from going through it the second time, third time, fourth time, or whatever time it would be for you, by doing what I'm going to teach. And I'm teaching this to the new group too, so that's the same video obviously that they're seeing that you're seeing. But if you don't do this, folks, if you're already a charter member and you don't do what I'm suggesting, you're going to waste 2021. And the new group that's coming in will end up doing it the right way, and you will still be behind in what your expectation and or what your goals were by becoming a student here. You're going to be more organized. You're going to be more, focused on what it is that you're trying to look for. And I'm also going to be outlining specific patterns in the chart reviews, so that way we can start seeing specifics. You've been seeing these types of things. Now I'm going to start pulling out patterns so you can see exactly what you should be identifying and training your eye. So by the time we get through 2021, those of you that have not been able to acquire a skill set in observing and seeing where the patterns are, you'll have an enormous amount of experience by looking at what I see in the charts versus having you only annotate them in your own analysis and study, which is pretty much what I've been encouraging all this time. So a little bit more hand-holding by me, and it's been a reluctancy on my part. I didn't want to do it, but because it's my last year doing this mentorship, enrollment, and all that stuff, there will be mentorship going on. I'm not saying that I'm not going to teach you after 2021. It just means that I'm not taking new students in. So I'm trying to get everybody's focused on the things that should be focused on, so that way when everybody's in the forum, because we're going to be using that more in 2022, when this happens, we will all understand each other. So it won't be like, hey, can you do a video on that, Michael, because it doesn't make sense. You're going to know what I mean, okay? And charter members, you will have a algorithmic lesson before the month ends, and we'll be building on those models, going through model 1 through 12 again. Until I talk to you on this weekend's weekend commentary, be safe, and I'll talk to you then.